I just wanted to start off by asking you about the sell-off we're seeing in terms of Japanese government bonds. Is that more to do with the global trends, the global dynamics, or is there also the domestic side of things that perhaps domestically investors are sitting on the sidelines as they're waiting for more signals from the BOJ in terms of rate hikes as well?
Yeah, I think basically it's a combination of both. And one of the reasons that the JGB has been sold off from the beginning of this year is that we have a BOJ meeting this month, and the expectation is that the BOJ is on hold. But my expectation is that BOJ will going to be raising rates. So there's a kind of split opinion in terms of whether the BOJ is going to be raising rate or not. So concern on the BOJ action is also another reason for the market to selling off.
So in your mind then, Tadashi-san, what is the fair value for the Japanese 10-year yield?
Well, up until the last year, I think the fair value is around like 1%. But given that the BOJ is going to be raising rate probably twice in 2025, probably that range has shifted upward to like between the 1.1% and 1.3%. So fair value at this moment is probably like 1.2%. So we are very close to that fair value, but I think the market can really overshoot to upside. So short term, I think the market still are going to be testing upward to like 1.25% or maybe 1.3%, depending upon the U.S. Treasury yield situation.
Tadashi, something that I look at very closely and something that technical analysts have been pointing out as well is this crossover between what we're seeing over in China with the, particularly on the long-dated yields, when we look at the 30-year, which has actually crossed paths now lower than the JGB, and then now everybody's looking at the 10-year and whether that phenomenon actually might play out in that space as well, because, of course, the expectations for China's economy, some of the deflationary pressures, a lot of talk about Japanification and the risk there for China's economy too. What do you believe this is telling us about these two Asian economies and how investors are pricing in what is taking place here?
Yeah, I think you just accurately summarized the situation that China is probably Japanizing. We saw this situation back in 1990s and 2000, that yield continued to go down and down, decoupling from the rest of the world. So the China looks like very similar to what we had been experienced in 1990s post-bubble situation. Having said that, I think the Japanese JGB 30-year is a little bit too cheap, given that the yield has really gone up above 2%. Currently, BOJ policy rate is only 0.25%, and that's going to be expected to go to like 0.5% or 0.75%. But even so, a 30-year JGB yield is a little bit too high for the policy versus policy rates. So I would say that the Japanese 30 years, valuation is cheap, and might be a good situation to buy 30-year from the long-term perspective.